What's up, guys? My name is Jack. Welcome to Invest Today. Today, we're going to look forward. We're going to look past 2018. We're going to look into 2019. And I'm going to tell you the best sector to get into in 2019. This is my prediction. Obviously, markets can do whatever they want, but this is something that I think a lot of people, including myself, have started to predict. And honestly, the best sector in 2019 is going to be the financials. That's just how it's going to be more than likely. The financials have had a horrible 2018, and then I own Goldman Sachs, so it's kind of painful. I've owned them for a while, for the majority of 2018, and it's been an absolute disaster. But I think, if I'm right, it's going to be a great bull market in 2018, and this is why I think the financials will be the best performing sector in 2019. So the financials, I honestly believe Goldman Sachs is the best of breed. Out of all the financials, there's a lot of great names, and I could own a lot of these. I'll tell you the ones that I would be willing to own. But I honestly believe Goldman Sachs is the best of breed in terms of the financials. Other amazing names that you could buy right now is JP Morgan and Citi. So those, and Goldman Sachs, obviously, those three, I believe, are honestly the top. It's almost a wash, but I went with Goldman at the end of the day. But any one of those three in terms of the national financial corporations and almost international, those are great options. Now, if you want to go a little smaller, like regional banks, Wells Fargo and Bank of America are the two that I truly love, and I would own those as well on more of the regional scale. So any of those options are great. They all pay dividends. So you get a guaranteed yield each year, which is awesome to have a little income and for dividend reinvestment. And please, guys, reinvest your dividends. Do not get your check, even if it is $1,000. You own that many shares. It's not worth it. Reinvest it and grow that position. That's what I recommend. Do not get your dividend checks. Reinvest your dividends. So also something I want to talk about is for the first time in at least my lifetime, it's a rising interest rate environment. So what that means is that automatically helps all the banks, because they give out loans and they hold your money and they kind of profit off what the interest rate is currently. And for the first time, this is a rising interest rate environment. It just started to happen kind of midway through 2018, and I predict it'll continue to be a rising interest rate environment. The Fed is actually set to hike rates coming up, I think, on Thursday. And some people believe it's even as much as 0.5%. Others believe it's a 0.25%. But nonetheless, the rates are increasing, so therefore the financials automatically benefit from that. Tax breaks. President Trump has come in with the tax breaks, and it's really benefited the average American family as well as the corporation. So all that means is, the tax breaks, politics aside, it puts more money in people's pockets. So if people have more money, they're more likely to save some, spend some more, maybe invest some more. It's all going to kind of get pushed through to the bank. So think about it, when you get $1,000 more, if you want to save, you got to put it in the bank. You don't keep it under your mattress. And that directly affects the banks, and it's going to help them big time. Rising wages. People are getting paid more. At least in 2018 and 2017, wages have been on the rise. And, that's something that's, again, really going to help people. They have more money to save. And then in turn, maybe they want to invest it, put it in the stock market. You have higher 401k balances. It's record highs for 401k balances. And when you have a 401k, most of it's just dumped right into the S&P, and or the Dow Jones or the NASDAQ, Russell 2000, whatever it is. And you can see the evidence of that now because they're all pretty much at all-time highs. At least the S&P and the Dow Jones currently at the time of this video recording are at all-time highs. And that's a byproduct of people having more money, putting it in their 401k, and those 401ks pretty much just automatically dump them into the averages. So that you can see evidence of that right now, and that's so important. We are, however, at a long bull market. The market is kind of long in the tooth. A lot of people are saying that. And whether you believe so or not, it's undeniable that this is the longest bull market in American history. So what does that mean? If you know history, typically volatility is ahead. So whether that's in 2019, 2020, I don't know. No one really knows. And if they tell you they know, they're lying. But what I can guarantee you is at some point in the future, there's going to be a market correction. There's going to be a sell-off. There could be a crash. Who knows? Who does that benefit? That automatically benefits the banks, especially Goldman Sachs. Goldman Sachs makes a ton of money on market volatility because think about it, when you have a trading platform, you execute a trade, high market volatility means a lot more buying and selling versus just a long bull market like we saw in 2017. So they profit off that trade. My 695 every time I buy or sell, a security. Every time you buy or sell a security, 695, 695, 695. That adds up. More market volatility equals more profits for Goldman Sachs and the rest of the banking industry. More money's coming in and out of the banks, and they're just going to benefit in the long term. Let's take a look at some of these valuations. They're all trading at such a crazy cheap valuation that I really believe the banks are a fantastic option for you to invest in the future. We take a look at Goldman Sachs, ticker symbol GS. It's trading at $235 a share, so it's definitely on the pricier side as terms of just stocks in general. It has a decent dividend. The yield is 1.40%, and the PE ratio is fairly valued / a little undervalued as the general market goes at around an 18 or 19 PE. They're coming up to report earnings on October 16th, so that's definitely a day to mark in your calendars if you're thinking about buying Goldman Sachs. That's definitely a day. I believe they're going to blow numbers out like they did the last 2 quarters in a row since I've owned them, and I'm really looking forward to that date. Take a look at JP Morgan. JP Morgan, something that sticks out immediately to me is Jamie Dimon. And when you talk about, a good management team, he is really the pinnacle and the quintessential, CEO or leader of a company. So that's something definitely to take in consideration right off the bat is who is at the helm. And honestly, it can't get much better than Jamie Dimon. So if we look at the PE ratio, it's slightly less than Goldman Sachs at a 15. This one's definitely undervalued, and it pays a 2.70 yield, which is better than Goldman as well. These are both kind of the best of breed companies in terms of the financials. Either or, are awesome. Typically, Goldman's on more of a pullback than JP Morgan, which is why I picked up Goldman. And, I believe both are poised to really outperform the market in the future. Thank you, guys. Please click the subscribe button right here. Throw me a like, throw me a comment. Are you bullish on financials in 2019? What do you think? Do you own any of these positions that I talked about today? Let me know in the comment section. Thank you, guys, and I'll see you next time.